Holy smokers, this ain't no dang jokers, folks. This market is getting crazy. I'm sure if you're in this market right now, you're looking at this and you're like, what is going on here? Like, last week we were crashing. The markets couldn't do anything. Stocks were reaching levels that a lot of us were looking at. It's like, this is just ridiculous. And here all of a sudden we're getting back to back very strong days in the market. If you own small cap stocks, you're probably seeing a lot of upward movements. And I have a lot of news to share with you here today on what is going on with the underlying fundamentals of this market and what's essentially flipping this whole thing over essentially right now, okay? There was also a stock I was buying pretty heavily after hours here that I want to also tell you about that stock because it's reaching some pretty darn interesting levels. That's all I'll say about that. Make sure to subscribe to the channel. All we do is talk stocks all the time if you join me every day. Hello, happy to have you guys here. We got a lot to get into in this video, okay? UPS, this is where it starts, okay? UPS just made a 14% plus move. That is an epic move. UPS stock, usually on earnings, you should expect UPS to move 4 to 8% upside downside, okay? So meaning essentially whatever they report for numbers, like usually they should go up or down 4 to 8% roughly, okay? 14% is insane for UPS stock. This is a large cap company that is not a volatile stock. So for UPS to just move 14%, there has to be, some incredible news, okay? They've had to have reported something where everybody says, oh my gosh, we are way too bearish on this market and there's a lot to be darn excited about. And this is a type of move. UPS stock, this is not driven by retail investors or something like that or Wall Street bets. This is driven by big money, hedge fund money. And that money is saying right now, we messed up. We went way too bearish on this market and we need to flood in as fast as possible. And that's how you get a 14% move here, okay? Now, this next slide is extremely important, not just for UPS, but for the entire stock market, okay? So, look at this. UPS stock surges. Earnings smashed expectations. That's one thing. The much bigger thing is guidance is even better. This is what everybody's looking at. If you're at all scared about the economy, right? Which I have worries about the economy, but I pretty much have worries about the economy all the time. This is something you want to look at because UPS, you're gonna get a great understanding of what's going on in the global economy from UPS. If you want to actually know what's going on in the underlying economy, look at UPS, look at FedEx. Don't look at government numbers they put out because they're always backwards looking and they're not going to give you the true extent of where we're at today. Okay, you want to know where we're at today with the economy and how things are going? Look at UPS, look at FedEx and companies like that because they're doing business all over the globe and they're shipping a ton of different products. Not like they have one special product that if it's moving great, it's like, oh wow, maybe that's just this specific company. Like let's say Apple reports really good numbers, right? And has really good guidance. People could look at that and be like, well, maybe it's just this particular iPhone selling really well. Maybe that's why the stock's moving up. Well, with a company like UPS, they have nothing special out there. They're just shipping stuff all over the place. They're a logistics company. And so there's nothing that's going to all of a sudden make them do amazing or something like that unless the underlying fundamentals of the economy are in a pretty darn good place, okay? UPS stock jumped Tuesday. Well, that's more than a jump, 14+%, after the company reported better than expected fourth quarter numbers. The earnings beat was good, but that wasn't the best part of the quarterly report. The logistics giant also raised its dividend, which that's incredible. Wait till you see this dividend rise, essentially, okay? That's something that if you want to look at, wow, this company is really confident in their 22 numbers, wait till you see the dividend rise. It's incredible, okay? And offered strong guidance for 2022. That is what's key in this market. It's a solid template for any company dealing with labor tightness, inflation, and supply chain problems in 2022. UPS reported earnings per share of $3.59 on sales of $27.8 billion. Wall Street was looking for EPS of $3.10, so that's a really nice beat on EPS, and they were looking for revenue of $27.1 billion. So basically, UPS beat revenue expectations by $700 million. A year ago, UPS reported EPS of $2.66 and $24.9 billion of revenue. So basically, UPS revenue year over year is up about $3 billion roughly, and EPS is up almost $1. That's incredible. But wait till you see this dividend rise. That's even more incredible. In addition to solid earnings, there was a dividend hike in 22 guidance for investors to consider and get excited about. The quarterly dividend is going to $1.52 a share. up from $1.02 a share. Now, everybody that might not know much about dividends, let me explain why this is such a massive deal, okay? So essentially how this works is that is about a 50% rise in the dividend payout, essentially. A company like UPS usually might raise their dividend by 2%, 4%, 6%, maybe 10%. That's a pretty big move, okay? Maybe 15%, a company that like UPS has been paying out dividends for a long time and has a dividend track record. A 50% rise for a big dividend payer already, like UPS guys, that is nothing short of UPS saying, hey, our business is in a great spot for 22 and going to be in a great spot for future years as well. They don't go ahead and make a move like that unless they're super, super confident, because if they make a move too big, and guess what? All of a sudden you have to bring it down and the management team looks like they don't know what they're doing, right? Looking ahead, UPS expects 2022 sales of about $102 billion, operating profit of about $14 billion. Analysts had projected sales of $100 billion and operating profit of $13.2 billion. So basically, UPS expects to beat, what analysts had expected by about $2 billion. Now, keep this in mind. When executives go to make these numbers, right, in these projections for the upcoming year, usually they are a little gonna lowball it, right? Because they don't want to be in a situation where they overpromise and underdeliver. Otherwise, they look horrible, right? And the board of directors starts putting pressure on them, and board of directors is like, hey, maybe we need to get a new CEO in here, or a new CFO, because you guys can't project your numbers, right? We're missing numbers, and next thing you know, stock price is falling, right? So for them to come in and say, we're going to be at least $2 billion above what you guys are expecting, that's a huge, huge statement and much more profitable, right? And hopefully that even leaves them for more upside throughout the year. The execution of our strategy is delivering positive financial results and driving strong momentum as we move into 2022, said the CEO. So this was a huge thing for the market, guys, and I mean absolutely massive for everybody that has, been worried all about, what's going on with the market, what's going on with the underlying economy. Are we going to get ourselves into some trouble? When you have UPS come out, I don't think there's a better company to look at in the world than UPS for these sorts of guidance and numbers. So, yeah. Thank you, UPS. You definitely helped in the entire market, essentially, all right? So that's UPS. Now, if we go ahead and look at some of these stock price moves here, and then we got other things I want to show you guys here around put data that's going to blow your mind, and then we're going to get into a stock I was buying after hours. But here today, Smile Direct Club, another 10% move for that one. GoodRx, 8.7% move. Lemonade, 6% plus. And remember, these stocks had an amazing day yesterday and a very good day on Friday as well. So it's not like these stocks, this was like a bottoming out day or something like that. These stocks have already been starting to run over the past few trading days. So for you to see 10%, 8%, 6% moves, this is massive. Voyager Digital, 5% move there. Avant Brands, my favorite stock under $1, right? 5% move as far as Avant Brands go. These are big numbers, right? SoFi, 5%. Fubo, almost 5%. Celsius Holdings, 4.5%. Honest, 4.5% move. Revolve, a 4.3% move in Revolve there, right? Square, 3.4%. Look at this one, Corsair Gaming, good old CRSR, a 3.4% move. I did buy some options on CRSR for January 2024 yesterday. The Hood. So this is an incredible stock price move, and this is why I try to explain to folks, when you're in these stocks that are so beaten down, even if you get bad news, sometimes those stocks can move crazy because they almost overshoot to the downside. And so Robinhood, I don't like the underlying fundamentals of the company, but I can't deny the fact that this was a stock that was just like priced for the end of the world, right? Look at this. This stock has climbed 45% plus in 3 trading days. A 45% return, if you got a 45% return in the market, that's amazing, right? If I get a 45% return in 2022 for my stocks, I'm going to be very happy with myself. I'm going to be like, hey, Jeremy, you did good, okay? A 45% plus move in 3 trading days is beyond ridiculous, but that's what this stock just did. It was at $9 and some change just a couple days ago after they reported their earnings. And here today, $14.50 plus. That's nothing short of incredible. And so I want you guys to kind of keep this stuff in mind in the future, that sometimes these stocks just so far overshoot to the downside that even if the fundamentals of the company aren't the one to be the most excited about, which it kind of puts Hood in that situation, man, it's just the fact that all of a sudden, it just goes from devastated to not as devastated. And you get a 45% move in 3 trading days. And I explained this in a video last week. I said, shorts are setting themselves up in a lot of these stocks for max danger because they were max shorting these stocks into last week, right? And all you need is not the end of the world to happen. And I was talking about it. You get stocks to move 30 to 70% in a matter of a 1 to 2 week span. Not like 1 to 2 months, not 1 to 2 years. We're talking in a 1 to 2 week span. And so this is the danger for shorts where, I can guarantee you there were a lot of shorts that were shorting this stock into those earnings, right? And, all of a sudden, a lot of those folks have gone underwater really, really quickly if you've been shorting this one very recently. So, yeah, look at Smile Direct Club, SDC, right? I was negative $40,000 on the stock at this time last week. And basically, I went from negative $40,000, because that one was bottoming out at $1 something a share, to up almost $18,000 in a matter of 1 week. In a matter of 1 week, from negative $40,000 to up $18,000 in 1 week. And that's the type of moves you get in this sort of market where it's just like these, SDC's priced for bankruptcy. Anything not bankruptcy for SDC, and the stock's moving higher, right? If they just get cash flows in a decent place, the stock's moving higher. You're just getting this cycle with some of these stocks where it's literally like they're priced for the end of the world. Robinhood's price, is priced like that no one's going to use a brokerage in the future or something like that, right? And, at the end of the day, we can't deny the fact that there's still a lot of people that use Robinhood. Not my platform I use, but there's a lot of people that use Robinhood, right? We can't deny that. SDC has, a business that's a needs-based business, and they're going to continue to thrive and build that business over time. But they were priced for bankruptcy as of last week, right? They're still priced for bankruptcy, basically, even this week. But yeah, the flips happen so quickly, man. That's the thing. You think, oh man, it's going to need some time for this to play out. It's going to need 6 months, 9 months, 2 years for things to kind of play out and get. No, dude, it's like a week, and all of a sudden, you get these crazy epic moves. Now, I've been talking a lot recently how. This is something else I was talking about last week. I was saying, the Cathie Wood bears have gone way too far now. And they should have been shorting Cathie Wood, doing the SARK stuff in January of 2021. Instead, they've been piling in max shorting her stocks and max shorting everything in the past few weeks. And I'm looking at that, I'm like, you are so far late to the game, but just like most of the time, the market likes to follow each other around and they're late to the game. Cathie Wood's ARK sees end to outflows as bearish bets wane. Cathie Wood's flagship ETF has been caught in the middle of a push-pull, with its latest trading data suggests bulls are eclipsing bears, at least for now. Traders poured almost $294 million into the ARK in ETF, essentially, which is ARKK, CathieWoodStocks.com. That's my website. We track Cathie Wood's top 25 holdings on a daily basis if you ever want to see that. In the most recent session for which data is available, the biggest intake was since June was enough to erase this year's withdrawals, with the ETF now posting about $142 million in inflows since the end of December, according to data compiled by Bloomberg. So that's a big upward move just in the past, essentially, couple weeks here. That's an astonishing turnaround for a fund that delivered short sellers more money in January alone relative to all of last year, right? We know Cathie Wood stocks were just, basically devastated throughout the month of January until basically the last trading day. They started getting kind of saved. ARK had the worst monthly sell-off in its history on concern that basically the Fed would tighten. We all know all that stuff, right? And basically, after making nearly $1 billion in 2022, traders may be wrapping up their bearish bets and closing positions. Short interest as a percentage of shares outstanding of ARK dropped from a record 10.6% last week to less than 9% according to data. Shorts closing requires traders to buy back borrowed shares, which can often boost the price of shorted security. And so this is a situation where the flips in the market happen really, really quickly. And, as of last week, ARK fund was down over 50%. It's very rare you get ETFs to go down 50+%. Okay. And so here's some food for thought. It's usually not a very good decision to go max short an ETF that's already down 50+%. You're asking yourself for a whole lot of trouble. The risk reward is not there. Last year when Teladoc was trading at 300 and Zoom was trading at 400 plus, right? And every single one of Cathie Wood stocks were trading at pretty insane valuations, especially for being unprofitable companies. I think it made sense to short, but not when the fund is already down 50+%. It's just, the risk reward is not there. The risk reward is not there, but this always happens in the market when stocks are running up, people pile in like it's nobody's business, right? And when people are getting out or people are shorting and they're making some money, the shorts pile in full, both hands in, and it's like you're setting yourself up for massive risk, okay? Look at this. Everyone is hedged for a crash. This is good stuff here. Out of good old Goldman Sachs here, okay? We have been averaging $1 trillion worth of puts per day. The largest on record. Look at the put volume. It has gone insane recently. I mean, absolutely insane. They've been averaging $1 trillion worth of puts per day. I don't even know how to fathom that number. Like, literally, that's just like such a ridiculous number. I'm like, it was one thing when it was like a $400 to $600 billion type number, right? But when you are averaging $1 trillion worth of puts per day, right? Everybody's hedged for a crash. And when everybody's hedged for a crash, you're more likely not going to get that crash, okay? You're more than likely not going to get that crash when everybody's hedged for a crash. Crashes usually happen when no one's expecting it, and when everybody's kind of caught off guard, and no one's, like, oh my gosh, what? All of a sudden we're going to have a crash. This isn't how the market works, okay? And so this is something I look at as pretty darn extraordinary, that everybody's flying into puts when, and look at this, okay? In the Rona crash, guess what happened, right? Right around the time the market bottomed, puts went to sky-high levels, the highest levels they had ever reached, which was over $800 billion per day at that time, right? Over $800 billion per time. And as soon as it peaked, you know what happened? The market started going to the moon, okay? And so I'm not going to predict that the market's going to the moon now or something like that. But what I will tell you is I feel pretty darn comfortable with how much bearishness there is in the market recently. The hedge fund conference, there was so much bearishness. Tom Lee says he couldn't find somebody bullish at that conference, right? Retail investors have flooded out of this market, and you're averaging $1 trillion plus $1 trillion plus of puts per day, the largest on record. That's the type of stuff that makes me feel very, very comfortable nonetheless, okay? Very, very comfortable, because they always get it wrong, man. They always get it wrong. It's just the way it works, okay? Now, after hours. So there was a lot of earnings after hours. I was trying to keep track of them all. It's a lot, okay? But there's 3 core earnings that are market movers after hours, okay? One is AMD, one is PayPal, one is Google McDougal. AMD, great, okay? Great earnings by AMD. Investors love it. Stock's moving up very nicely. And so that's good news for the whole entire semiconductor stocks out there, right? PayPal, on the flip side, it did not report impressive numbers. This stock's been getting hammered, and it just got hammered. And I might have been buying some PayPal after hours. We'll see in just a moment, okay? But nonetheless, PayPal had to mess it up. If PayPal was green too, if this was a 5-10% green, or dare I even say, let's say a 17% green, I would have come out and said that the market crash is over. That's what the title of this video would have been. But since PayPal had the troubling numbers there, and I saw some troubling numbers at Starbucks, I was like, I'm not gonna go on that diving board yet and announce that. Because of the kind of weakness in PayPal there. That was the one thing. But if this had moved super green, that would have been literally the end of the market volatility in the crash, and we would have been just up to the moon after that. And we're already still looking really, really good. It's just that kind of is something that gives people a little pause, like, hey, what about those PayPal numbers? They own PayPal and Venmo, transaction companies, right? Google McDougal, great earnings from them. On the core front, the troubling numbers were YouTube, which was what I was scared of, based upon kind of the ad rates I've seen for Google. I was worried about that, and sure enough, YouTube came in not strong at all for the ad numbers there, okay? However, overall, the folks are looking at that as strong numbers, and Google's going to do a stock split, which is like a 20-to-1 split, and we know how that usually goes. That's usually a pretty good thing for the stock price, okay? It doesn't really change much other than obviously, if you own one share of Google, you're not going to have 20 shares, and the price is going to be divided by 20. But what it does is it's just like a psychological factor, as people say, if it's a cheaper stock, more people will buy in it than versus if it's a $3,000 stock or something like that, which it's almost at $3,000 after hours, okay? So Nonetheless, there's a much more good news than bad news, especially when it comes from the AMD and the Google move. And this is the big dog that really, really matters. Okay, and this could end up moving Facebook as well, which Facebook reports tomorrow. That earnings is going to be huge. And then the next day, by the way, is Amazon. So we're in it right now, folks. We're in it. But now that Google's reported really solid numbers, you had Microsoft report really solid numbers, you had Apple report great numbers, like incredible numbers. Now, and you have Tesla report really great numbers, right? So now 4 of the biggest companies in the world have reported really, really good numbers. Tesla, Amazon, Microsoft, Google. So the only real ones we really got left now is Facebook and Amazon. And so as long as those ones do well, right? There's really nothing you have left to go off of to really be bearish in this market other than the Fed stuff. But the Fed stuff, we already know they're going to raise more than likely in March. Everybody's expecting that. The only thing that would be shocking is if they did some crazy raise or something like that, right? Now, PayPal. I was indeed buying it after hours. And my plan is with PayPal is I'm going to put $15,000 in the stock for every $5 it goes down, essentially, right? So it might not go down anymore. This after hours move might be the bottom. I don't know. But basically how this works is if it goes to 141, I'll put another 15,000 in. If it goes to 136, I'll put another 15,000 in. If it goes to 131, I'll put another 15,000 in. If it goes to 126, I'll put another 15,000 in. That's if it continues to go down like that. I don't know if the stock price is going to bottom here after hours or it's going to keep going down over the coming days, weeks, or months. All I know is I love PayPal. I love PayPal where it's trading at. Anything under 170 for the stock, I absolutely love. As somebody that's looking at this from a long-term perspective, and this is my first time ever buying PayPal. So my plan is to, if this baby keeps going down, I could end up building it into $100,000, if not a multi-$100,000 position, which I would be a-okay. And there's not a lot of larger cap companies that I'm that excited to buy right now, but PayPal is one of those that's really, really devastated. The eBay deal has really hurt them in the short term, right? Really, really hurt their business in the short term. Is from my understanding, starting in 3Q, that goes away completely. So their growth rates are going to start looking great in the back half of this year. And then you have the Amazon Venmo deal start to hit more in the back half of the year. And so next thing you know, this could go from kind of this negativity cycle. Oh, the numbers aren't impressive. They missed or this metric, things like that in the front half of this year, right? To all of a sudden in a quarter or two, the story starts getting flipped and all of a sudden it starts to kind of get into a major bull cycle here. So yeah, nonetheless, when it comes to PayPal, I have no problem making that into a 6-figure position. That one I really, really like for the long term. It's a great time to learn everything you need to learn about researching stocks, understanding companies, reading financial statements, all that. I have a program that is the best out there for doing that, as well as be part of our private Discord chat. If you would like to learn more about that and apply to join that, go ahead and check out pinned comment down there. Much love and have a great day.